Hey everybody, Ben Woolfolk, 12 Rivers Realty, and this is your Q1 2023 market update. We've got our first large data set back, and it's looking very stable, looking very normal, meaning it's repeating itself, so that we can get an accurate view of kind of what's to come. So what's happening out there? Well, we're kind of like the I've said on most of my other videos in the January, February, March. Um, Home prices are down year over year. If we looked from the peak of last year, depending on what price point you're in and location and all that kind of fun stuff, you're probably down 10 to 15%. But take into account that over the last 2 years or the previous 2 years, you were probably up 40%. So most of the sellers right now are still looking at a 20-25% equity gain. Your days on market have increased even a little bit more. We're up to about 80 days on market. Both buyers and sellers are kind of coming to terms with that. If my buyers are favoriting houses that may have been on the market for 30 days already, which they didn't do this time last year. If a house had been on the market for 2 weeks last year, they assumed something was wrong with it. Why didn't somebody else buy it at this point? Now we're getting a very relaxed flow, which is great. We're seeing a lot of price reductions, obviously, but we're also seeing a large increase in withdrawals and expired listings right now. And that is kind of showing the willingness or unwillingness of the seller to just completely keep dropping the price, and the buyers. It's kind of a little bit of a standoff right now. A lot of sellers are saying, you know what, I'm just going to withdraw this thing. I'll either stay in my house or I'll become a landlord, or I'll do something where their confidence is that this time next year, when they go back on the market, it's going to be a much better market. And I agree with that. If you're a seller right now, I would look at being a landlord for the next 12 months, unless you have to sell. I think next year is going to be a much better time to sell when interest rates start to come back down, and all of these buyers that are on the sidelines right now hop back in the market, and prices are going to go back up, and it'll be a little bit less negotiating back and forth. A lot of folks are looking at Q1 right now as the low point. We could also have Q2 in this kind of a lower transaction amount. But once the Fed starts to maybe reduce the rates, which probably won't be until the end of this year, if not the beginning of next year, will we see a lot of people start hopping back in the market and prices start increasing. Let's see what else we've got. If you want to predict the housing market, which is something I do and a lot of other realtors do, just watch the Fed. Watch your 30-year mortgage rates. That when they drop below 6.5, when they get closer to 6, I always have a lot of my lenders call and say, "Hey man, my loan apps are up. You're going to see a lot of people coming back at you right now," which is pretty great. So that brings me to another point of who can't. Where are the good deals at right now? Who can't say, "Hey, I'm going to take this house off the market, or I'm going to become a landlord for another year and come back on"? Well, that's builders. Builders don't have that luxury. So the best deals in the market right now, and the vast majority of contracts that I've put in this year, have been new construction, because builders, they have to keep that machine running. So if you're looking for a good deal with either good incentives, they'll buy your rate down. If you don't have to have the house today, builders are a great place to look right now. So what's all of this mean for buyers, sellers, tenants? Buyers, again, you've got your pick of the litter right now. You can take a look with houses that have been on the market 10 days, 30 days, 40 days, 50 days. Sellers are becoming pretty negotiable. Now, your cost of money is a little bit more expensive than it was last year. You have some good products out there in the form of like a 10-year adjustable rate mortgage versus the 30-year. I think anybody that buys this year is probably going to refinance in the next year or two. So you don't need that full 30-year runway. And you'll have the same payment. It'll be a half a point cheaper to interest rate, and you don't have any additional closing costs. But we can talk about that more if that's something you're interested in. Sellers, expect long days on the market. You need to be negotiable with buyers. We're going to have low showings, but out of those showings, you're definitely getting serious buyers in those lower showing numbers. So it's quality over quantity this year for showings. Or if you can, again, you're going to be competing. If you're competing with new construction, it's super tough. I've got a listing in South Austin right now that has a new construction development right down the street that's selling for, with the incentives, it's a larger product selling for at or less than, we're selling a resale for. So it's pretty tough. And I think they're going to end up withdrawing and becoming landlords for the next 12 months. Again, tenants, it's always a good time to buy versus leasing if you know that you're going to be here or here in Austin, or it's a good investment for you. As always, if you have any questions about this or would just like to chat about it, I'm always free. I've got a lot more time this year than I did last year, which is pretty great. But give me a shout, shoot me a text or an email or something. Love to chat with you.